Hey, what's going on, family? Welcome back. It is your real estate advisor, Sir Ashley, and today I have a guest. You are in for a surprise. He is a wealth of knowledge. He's a mortgage broker, just a real estate professional. He has a unique way to make things that may be complicated to some very tangible and just down to earth. And that's what I appreciate about him the most, in addition to his professionalism. Well, without further ado, come with us. We're going to talk about 8% mortgages and what it's going to do to the housing market and the real estate industry as a whole. Let me bring Ortez to the stream. What's going on, Ortez? How you doing?
Hey, sir. Thanks for having me back. I know it's been a minute since I've been on, but I appreciate the invite. And I
It's
look
been a
forward
minute
to
since I've done one of these. So
hey, right.
thank you for sacrificing part of your Saturday to come share it with us. And I
Hey, no
appreciate
problem,
you.
man. Anytime you need some assistance, man,
Yeah.
I'm always there for you, bro.
So for the past couple months, I've been hearing or reading articles and seeing videos on CNBC, MSNBC, Fox Business talking about the dreaded 8% mortgage rate and what it's going to
Mhm.
do. Because we were in a 6.5, we got to 7, we were 7.5, and I saw Friday that interest rates ended at 8.1 as a national average. So we are
Mhm.
here. The
Yes.
dreaded 8% interest rate, which we haven't been since 1999, probably 2000s, right around there.
Mhm.
What do you foresee this number, this rate, doing to the real estate market in terms of sales?
Well, I mean, as you could attest to it, the inventory is already down in regards to actual home sales because of we like to call it the golden handcuffs of the twos and the threes, right? So a lot of homeowners aren't selling their homes at the clip that they should do or should be selling them because they are looking at interest rates in the high seven, low eights right now. Um, I mean, we do have the old saying, "What goes up must come down." But the 8% is going to be here for a little while. And I mean, just to kind of put it in perspective, right? Because
Mhm.
how often back when we had clients that were looking and they were in the 5%, they were saying that was high,
Yeah,
right?
no, we've experienced that. We've
Yeah.
experienced that like between
So
us two. We had clients and like, no, 5 is
that's
too
too
high. We're gonna wait
high,
till it comes
right?
down. Yeah.
So just so people have an understanding of what a payment looks like, I just took like a roundabout number, right? So if you had like a $2,500 principal and interest payment, so that's just principal and interest with at 5% interest rate, right? Your loan amount that you could afford potentially, if that was your payment, principal and interest, will be about $465,000. Now you look at that same $2,500 principal and interest payment at 8%. Now you're looking at a loan amount of 340,000. So when we
That's
tell people that,
that's
so you look at
insane. Yeah.
you look at that drastic mark. That's
Mhm.
$120,000 of buying power that you essentially, I'm gonna wait it out of the way, right?
Now, I looked at some stats recently as well. I'm glad you came with some numbers, and I
Mhm,
had to write them down because I had to write them down. So back in 2021, when rates were around 3
mhm,
in August of
mhm,
2021, the median home price from August 2021 to right now has gone up about 12% nationally. It's
mhm.
gone up more, but then it came down some. So right now it's at 12%. And since then, rates have gone up over 5%, right? So it was around 3. Now it's at over 8 right now. That, again, running numbers, decreased buyers' purchasing power by over 50%. So if they were looking, this is just fixed numbers, they're looking at a $400,000 home, then now they have to be at a $200,000 home,
Yeah, and
which,
I just did the numbers on that $2,500 at 3%.
yeah,
That's a $592,000 loan. So at 3%, you're looking at 592, and at 8%, you're looking at 340. So
yeah,
that's
it's
almost,
a big jump. That's a
it's a big
huge jump.
jump. So when mortgage loan officers or real estate agents, folks, if they're telling you, hey, get in on the ride, it's not because we don't believe that, the biggest thing is finding a payment that you can afford and finding a house within that payment.
Yep.
Because 9 times out of 10, and I can attest with Sir, um, the average is every 5 to 7 years, one of two things is going to happen. You're either going to refinance or you're going to sell that property, right?
Yeah.
Be it a family change, family increase, empty nesters decreasing, trying to downsize, things
Mhm.
of that nature. So trying to come out and say like everyone wants the best interest rate at the beginning, but you can easily refinance out of it. This isn't going to be like, I've only met two people in my whole life that have paid
Yeah.
off a 30-year mortgage. And that was my grandma and another dude who paid it off in 6 months. Those are the only two people because they had a plan, right?
Mhm.
But more than likely, this house you're not going to be in forever, or you're not going to be in that loan forever. So finding a payment that's comfortable to you is the most important thing when it comes to that. And I mean, I got other things I can break down with
Yeah.
that too, but at the end of the day, folks, like when you're talking about a mortgage, you want to have a game plan for your finances as a whole, right? Because I also run
I'm
into
glad you
people
mentioned that.
where,
I'm glad you
like,
mentioned that. You have to think about a game plan, like you said. A game plan just isn't present. It's what's happening in the future as well. Because
yeah,
people say we're gonna wait, we're gonna hold off. Well, those people that said that, it really, like one client I know, I don't know if you remember them, it really pains me because they had a $400,000 home. This was like in February of 2022. $400,000 home. There was only one community that checked off all their boxes.
I know who you're
And
talking about. Yep,
yeah, one
I
community
remember.
that checked off all their boxes, and they were listening to family members, and they said, no, we aren't going to do it. And the rates were around 4 at the time. And they said no. And then they hit me back up that summer, and rates were what? I think they're in the fives or something at the time.
Mhm.
And nothing. They couldn't afford anything that would have checked off their boxes and been suitable for them. So they missed out then. And now I know for sure that they're missing out now. And in that time, they were trying to avoid the rent increase. And I've been in communication with them. The rent has gone up $800 since our first initial conversation.
Mhm.
So when we talk about game planning, I understand family members, loved ones may think they have your best interest at heart, but you have to know and and talk to your immediate household when you're formulating that game plan and figure out what's best for you presently and moving into the future, knowing that rent probably isn't going to stay the same.
No, rent is keeping up with inflation. I mean, 100, 200, like you said, it's increasing up to $800 a month for the exact same thing that you lived in, right? It wasn't like the
It
owner
didn't. It
came in
didn't.
and
It didn't
replaced
get
the
bigger.
yeah, it wasn't like it got bigger. It wasn't like he replaced the roof. It
Mhm.
wasn't like he put a
Yeah.
fence in the backyard. It wasn't like he made an in-ground pool for you. It was just you existing in it, and it went up $800. Like, it's not
Yeah.
fair, but that's the gamble that you run by not having this plan. And I always tell folks, like, hey, maximizing your affordability could be as simple as decreasing your debts.
Yes. Most
And
definitely.
I tell folks that, like, I always, like, it pains me when I hear folks say, well, I can't afford X payment, right?
What's that
And
car
then,
payment?
yeah, which is the difference between like your $800 car note and
Mhm.
what you're paying now in rent,
Yep.
or the $400 you're paying a month to credit cards and what you pay in rent.
We
So in
talked about
reality,
something
folks, what you say?
recently. It might not even be car note or any of that stuff. Sometimes it's that DoorDash, that
Yeah,
Uber Eats bill every single month, right?
yeah.
We talked to
So
somebody where if you just reduce that, they could have afforded that home, not even take it out. We're talking about
yeah,
just reducing
or
it
that
to
could be their
something nominal.
savings. But yeah,
When
having that
talking,
plan, especially in today's market, right? With
yeah,
it being 8%, like
8%.
the rates will come down, but this is what we're stuck with right now.
And the thing is, I think it's going to be, not even think, Jerome Powell's told us it's going to be higher for longer, right? And I was looking at the numbers and people talking about, you might hear news talking about a rate cut happening and all this stuff in the next couple meetings. I say don't bank on a rate cut at least until mid 2024, if not late 2024. Now, that's not saying mortgage rates will stay as elevated. I think there's a spread in there that's about 300 basis points that is typically around 100, but we need to get inflation down. We need to have some kind of stability for banks and lenders to reduce that spread. and then that will be seen in the interest rate, mortgage interest rate. But
I mean, because in order
yeah,
to, because there has to have a refi boom has to happen. Like it just has to. Like when it happens, we don't know. But
mhm,
because the thing is, the rise of inflation isn't matching with like consumers pay, like our pay rate, right? Like so people
yeah,
aren't getting raises the way inflation is going right now, right? So
mhm,
what happens is, like I said, what goes up must come down, ladies and gentlemen. You're not going to see 8% forever. Ideally, like sir said, we hadn't seen 8% since early 2000s, right?
yeah,
And like the sweet spot technically is where we were in like before the economic crash, like between the fours and fives and
four and
sixes, right?
fives, yeah, yeah,
Yeah, fours and fives is where is like the sweet spot where everybody's happy. Like, you can get the things that you want reasonably,
mhm,
right? But until those rates come down and it's more manageable, because like I
yeah.
said, the golden handcuffs is going to keep people locked
It's gonna
in.
keep people in the house. I've actually had conversations with some clients there where they want to move, um, but they looked at the numbers and see what the difference is as far as what their payment will be and everything. And honest to God, one of them was like, "Hey, the kids gonna have to have a bunk bed. Like we're
Yeah,
not moving to get that bigger, that other bedroom. It's gonna be a bunk bed. That's what it's gonna be because it just didn't make financial sense for them to uh to sell, even though they had a lot of equity, to sell and then buy another home.
hmm,
So the 8% interest rate is going to even further hamper the amount of transactions. I put out a video over a year ago where I predicted that the housing market was going to come to a freezing halt. And did I foresee 8%? No, I did not. I'm not going to say I didn't see foresee 8%,
nobody saw that.
but I did see that when rates were so low and literally everybody that refinanced or bought, hell, I bought right when it was coming up because I saw rates going up and I bought right before it started going up. So I saw that people got locked in, and just based on that, that was going to hamper resale. So I saw transactions coming down, right? Coming down significantly. I didn't think it would be the lowest mortgage purchase application since 1996. I didn't see that happening. But that is where we're at. And I think that's going to even happen even more as rates are around 8% and as we go into the fall and winter. Traditionally, that's the downtime of real estate anyway, where there's just less transactions during that time frame because just think about it logically, people that had to move or wanted to move did so right
Before
before
kids
school
went to
season.
school. Yep.
Exactly. They did so then. So I'm not saying nobody wants to. Nobody really wants to move during the holidays. You only really do so if you have to, right? Your job got relocated or you got laid off, whatever it may be, some extenuating circumstances, you had to move during Thanksgiving or Christmas, right?
Hmm. Yeah.
So that's going to be a limiting factor as far as transactions. So you will see a cooling or even further cooling off of the housing market. But for you buyers out there, this is your opportunity. I think it's going to be a replay or the same playbook for last fall and winter will pertain to this fall and winter. I had a buyer last fall where rates went above 7 in November. It was like 7.37 or something like that in November. I had a buyer put in an offer and we ended up getting $20,000 off and $60,000 in seller concessions.
Ooh,
Um, Now, granted, this was above the median price. Well, above the
okay.
median price. I'm not saying
Ooh.
if it's a normal home and all that. That's not. If you're at the median price, I don't think you're going to get that, and the home is moving ready and all that. You're not going to get that many concessions. But this is your time as a buyer. I'm not saying it's a buyer's market, but right now you are the prize. Right now,
Yeah,
if you're looking.
100%.
Um,
Like if you can do it now, go ahead. Exactly.
and
Especially.
ask for what you want and make the deals. Like when you go ahead and present your offer, you want to make sure the numbers work for you to where you're comfortable at this interest rate, not factoring in it coming down or anything like that. Make sure you're comfortable with the payment at this interest rate and use those concessions to buy down the rate or whatever that may be to make it even more reasonable for you. We talked about rate buy downs a while ago. Are
Mhm.
those still in play right now?
Yeah,
And what is a
they
rate
still
buy down, if you don't
they
mind?
still have the, some programs have the 3-2-1 buy down, the
Yes.
2-1 buy down, the 1-1 buy down. But the thing that I am always an advocate for, and I
Mhm.
think we were in lockstep about it, is using those concessions to get a permanent buy down,
Yes.
right? So they still are out there, and people do take advantage of it.
Can
But
you talk to about real quick? I know we've talked about it. People that have followed us have heard about it, but what is a rate buy down? I know I threw the term out, but coming from you, what is a rate buy down?
do you want me to touch on like the temp or the permanent?
Permanent.
Permanent. Okay. So let's say, ladies and gentlemen, it all kind of hinges on using the seller concessions that the seller is giving you to permanently buy your interest rate down, hence permanent buy down, right? With the temporary buy down, there's a calculator that needs to be factored in, and you have to make sure that the seller gives you that exact amount for whatever the buy down is, and whatnot. But if you have a set amount of actual payment, so let's just say the seller is giving you like $10,000 towards concessions, right? And those concessions just say any costs associated with the loan. Well, the discount points are a cost to the loan. So essentially what you're doing is you'll have the seller pay for your permanent buy down, right? So let's say that 10 grand can get you, hypothetically, right, can get you a full like 3/4 of a point, right? So let's say the market was at 8, now you're at a 7.25 with the seller's money. Okay. And that could change like your mortgage payment significantly once we're in this higher mark of like what you would be paying monthly in that regard. So the permanent one is basically just using the seller's money, to whereas if you don't have to refinance or want to worry about refinancing soon, that's not changing up until the point when you refinance. So I was always an advocate, and I'm always going to be an advocate for the permanent buy down, because too often folks forget, like, oh snap, I have been in the house
Yeah.
12 months and my
Yeah.
payments
Yeah.
about to adjust. Oh, that
Yeah.
adjustment's $400. Oh snap, am I ready for that adjustment? And then
I
24 months
say
later,
we want to
same
we want
thing.
to control what we can control, right?
Exactly.
Control
Yep.
what we can control. Like we want to eliminate as many variables as possible, right? That you can make this payment right now, right? Whether it be with your significant other or whatever. In 12 months, you don't know what's going to happen. You don't know if somebody may get ill, somebody may lose a job, whatever it is. And not only are you dealing with the stress of whatever the permanent payment or the payment is right now, you just added another $200-300. That's just an added weight on you to where you could have avoided all that. Nobody knows what the future holds, but as we said before, game plan. We want to game plan and control what we can control. So no, I think that's excellent advice. And real quick, I know we didn't start it off, but how can people get a hold of you? Your contact information will be in the description below, but please share it right now.
Okay. Well, like I said, I'm Ortez Fields, executive loan officer with Affordable Mortgage Partners. You can reach me via email, Ortez, ORTEZF, at mortgage-partners.com. And then also probably have the cell phone number in the description too. You can reach me via cell phone, 517-881-8352. I know that is a Michigan area code, but I
If
am
you're
here
looking in
in
the back, you
Charlotte.
see a Spartans throw back
Yeah,
there.
yeah, that's where I went to college.
Yeah,
So,
yeah,
but
yeah.
yes, I am here in Charlotte proper,
Okay.
to take care of all of my North Carolina and South Carolina clients.
Now you can help other states as well, correct? Your
Yeah,
license is
so
other
we do
states, so
have
I
other
know we have
partners.
a
We
little
have,
reach.
if you are in Michigan, Ohio, Florida, North and South Carolina, Texas, Colorado, I do have partners that can help you in those states as well. So feel free, if you want to reach out to me, I can get you in touch with them to get the ball rolling for those states as well.
No, I appreciate your time. Thank you, brother, for sharing your insight and knowledge with us regarding what you believe will happen with this 8% interest rate right now as we head into fall and winter. I'll
All
catch
right,
you on
no
the next
problem.
one.
All right, for sure, bro.